Now let's talk about the markets. It's been the end of the week. In the markets, it was a bear party on the last street this Friday, where the bulls weren't even on the guest list. The Nifty has slipped below 22,200. The Sensex barely clung on to 73,200 by closing bell. So no sector was spared from the sell-off. Auto and IT stocks have taken the biggest hits. In fact, it was a sea of red across the board. No safe havens, no mercy really. Clearly, the markets have decided to start the weekend early and not in a very good way. But now that we're on the month end, let's also assess what the markets have done. If February had a stock market theme, it would have to be the Great Fall, because look at the Nifty. It notched its fifth consecutive monthly decline. It went down nearly 6% for the month of February. In fact, it even hit an 8-month low along the way. So the broader markets, if you look at those have fared no better. Deep cuts across the board. Realty stocks bore the brunt of this downturn, followed closely by FMCG and IT stocks, again proving that when the bears come charging, nothing is spared. No pocket is truly defensive. But the big question now is, will March bring this turnaround, or are we in for more market blues? We are assessing that continuously by speaking to the experts. Listening to what Sudeep Bandyopadhyay has told us. We were in conversation with him earlier. He's group chairman of IndiTrade Capital, and he's listed out the top sectors that he's bullish on amidst all this ongoing volatility. He also says that retail investors should focus more on the large caps. Listen in.
Focus on large cap stocks as opposed to mid cap and small cap. There are a few reasons. One is, I think large cap stocks, valuation wise, are looking attractive in pockets. And I think the possibility of these stocks recovering faster is much more compared to mid cap and small cap. BFSI continues to remain a favorite. Remember, we are in an interest rate reduction cycle. And when interest rate starts coming down, I think BFSI does well. So I expect BFSI to do well, and large private sector and public sector banks can be looked at for investing. Also, we believe that Indian infrastructure spend, infrastructure construction spend is going to be significant. The momentum which was kind of reduced will pick up again and has started picking up. So cement demand will keep moving up. Finally, pharma and chemicals. Now, as far as pharma is concerned, we believe that domestic-focused pharma companies can be looked at because, the tariff issues will not affect them. And there is a 25% CAGR on domestic pharma. So domestic pharma is a good place to be in. Also, you can look at pharma companies having manufacturing facilities in US. There are few Indian companies which do have, and you can look at that. Specialty chemicals and chemicals is one segment of the market which has been underperforming grossly over the last 2 years. But now with what is happening on the tariffs, I think things are looking up and green shoots are visible.
Mr. Bandyopadhyay is talking about tariffs, especially on the impact on the pharma sector, which he says is not going to be too deep. In fact, that's what we've been assessing as well in terms of the impact of high tariffs on the Indian pharma sector. And this by the Trump administration, it really raises the specter of how badly a defensive sector like pharma could get impacted. So we had a chat with the industry leader, Cipla, the managing director of the company. Umang Vora was in conversation with us. He says that tariffs should not dictate the long-term policies of the sector, and says that major impact of US tariffs are unlikely to hit the pharma sector. So it really echoes what we were just hearing. Listen to what Mr. Vora said.
Very big brand medicine that sells at a very high price, a large section of our society cannot afford it. So tariff is not limiting the amount that a product can sell. And in any case, the tariffs are between 0 to 10% or something like that, right? And for most life-saving drugs, there aren't none. On the other side, the US needs actually much lower tariffs from Indian companies, because the generics industry is the only industry that probably reduces the healthcare spending. So from a pharma perspective, it's very difficult to understand why even there is a talk of tariffs, because both countries have very different perspectives. But I'm not sure, firstly, that a 20, 25, 30 type of tariff will come on pharmaceutical products. And I think there might be balancing, but it's too early to say what would be the change in strategies. I'm not sure tariffs should dictate what we should be doing as players.
If you like this video, then like, share and subscribe to ET Now.